Iran's supreme leader Ayatollah Khamenei vowed Israel would pay for the attack against its operatives.
They will be slapped for that, of course. Day by day, the regime will become weaker, and God willing, it will get closer to demise and destruction.
Iran's President Raisi and Hezbollah leader Hassan Nasrallah hinted the U.S. also might be targeted.
America is undoubtedly an inevitable partner in the crimes of the Zionist entity in Gaza.
The enemy will be defeated, as well as all who stand behind this enemy.
Iran may view the upcoming Al-Quds Day as a time to retaliate. On the last Friday of Ramadan, Iranians chant death to Israel and demand the end of the so-called Israeli occupation of Palestine. Anticipating the threat, the IDF is increasing its air defenses and canceling vacations for all military pilots and calling up air defense troops for duty.
Ukraine will become a member of NATO. Our purpose at the summit is to help build a bridge to that membership. And to create a clear pathway for Ukraine moving forward. We've done a lot of work on that over the last couple of days here in Brussels, a lot more work to be done between now and the summit. But we will see, I think, in the summit, very strong support for Ukraine going forward in its relationship with NATO.
Coming up today, stocks tumble, the latest Fed speak, the US tries to cool geopolitical tensions. What is NATO trying to do? Will Putin strike back? Oil rallies again, along with a flight to safety to treasuries, the jobs report tomorrow, and the hottest meme stock at the moment. Well, what do we have here? Look at this big bearish engulfing candle. On the widest range day we have had in months and months. S&P 500, top to bottom, did over 100 points, high to low today, finishing right at the low for the day. And we can see that pullback that's been going on underneath the hood for a few days has accelerated. Now got the S&P and Nasdaq, Dow and Russell underneath the 20-day moving average, along with a few stock sectors as well. The only stock sector above its 5-day and all other time frames is energy, and the market is moving more into a risk-off mode. We can see that with gold green across the board, oil green across the board, and volatility now uptrending across the board as well. So we got to hear from a few Fed speakers today. One sticking out the most was Fed President Kashkari, throwing some cool water on the hopes we might be getting rate cuts, going against the general consensus that the Fed's going to cut rates, and saying that he expects 2 rate cuts, but it's possible there will be none. I think you could translate that to meaning he hopes they can cut rates this year. But he, like a lot of others, are starting to face the cold reality that it looks like inflation has bottomed out and is creeping back up, especially when we look at the price action and leading indicators like commodities. And so the media largely pointed to that as the biggest reason why stocks slid lower today on the back of that latest commentary from the Fed saying they may not be able to cut rates. And no doubt that's important. However, I think what financial markets are really reacting to here are beating war drums, rising geopolitical tensions all over the place, with the US now accelerating efforts to try and cool things down. Biden directly telling Israel Prime Minister Netanyahu to lay your guns down, calling for an immediate ceasefire, and even going as far as to say future US support depends on your compliance with our requests. And this is on the back of a much more aggressive Israel who wants to do anything but a ceasefire, and they accidentally, in one of their latest strikes, just killed 7 World Central Kitchen aid workers, one of which was an American, and which Biden said he was outraged by and is trying to rein in Israel and their very aggressive approach in the Gaza Strip that is ongoing. Not only that, we just heard US Secretary of State Blinken says Ukraine will be a NATO member, and that's a pretty big bold move, flying right in the face of Putin and what he's been warning against. And it's kind of interesting. What is NATO and the US-led Western Alliance trying to accomplish by poking the bear and incorporating Ukraine as part of NATO? Is Ukraine really that an important strategic country to the Western Alliance? Commodity-wise, it is a little bit for wheat and grain, but otherwise not really much. And the Kremlin has just said that NATO ties are at the level of direct confrontation, and Putin has explicitly warned of nuclear-style retaliation if Ukraine was to join NATO and put NATO troops on the Russian border. As Putin's always considered Ukraine a subsidiary of the Russian Empire, they do share the same blood, same language, and have a deep and close cultural history together, and Putin considers NATO the sworn enemy. However, it's possible the US-led Western alliance is kind of provoking Putin into using a nuclear weapon that could then justify a big response. And maybe NATO already has a plan in place to quickly disarm Russia and their nuclear capabilities if they were looking like they were about to use them. So this could be an excuse from NATO and the US-led Western alliance to push Russia into a corner to potentially shut them down. And so that and the looming response from Iran seeking revenge on the Israeli airstrikes earlier this week on the Iranian embassy in Syria, which killed top Iranian military commanders, is sending oil higher, along with a bit of a flight to safety to treasuries. And just looking at the S&P 500 ETF SPY, going down to a 15-minute chart, this is when we heard from Kashkari talking about the Fed may not be able to cut rates, and the media naturally assumed that's what caused a big sell-off in the stock market. However, if that were really the case, we should have seen bond yields rise and bond prices fall. However, that wasn't the case. Just overlaying the chart with the Treasury bond ETF TLT and the blue line here. At that same time, bond prices rallied higher as yields dropped, and just overlaying the chart again with crude oil in the grey line here, and just putting in a vertical line on the chart. Right when crude ripped up, stocks came off, and just overlaying again with gold in the yellow. It's also a bit of a flight to safety to gold. And so that was a clear rotation out of stocks into crude and gold, treasuries. Not only that, been in a sea of red across stock sectors today. There was only 2 sectors that closed up. That was oil and gas, with energy pretty much closing flat, and the best performing sector today, aerospace and defense, up 0.39%. On a day we had semis down 2.66%, along with other growth sectors coming off the boil as well. And we can see that looking at some of the largest aerospace and defense stocks. RTX up 1.8% today on a momentum thrust signal breaking out. Same with Lockheed Martin, big move up, and L3 Harris Technologies and General Dynamics, higher highs, higher lows as well, breaking out on trend strength. Also got agricultural commodities moving a bit higher. There's a look at crude, seeming to hold above this prior resistance now, with light crude getting up to $87 a barrel today, and gold sitting pretty as well, above $2,300 an ounce. Big pop up in VIX there today, almost getting to 17, and a breakout in volatility risk premium. It's the difference between the VIX and realized volatility. Option dealers starting to demand more premium here to write contracts. And we saw a huge pop in the VIX 1-day, now sitting at 21. Quite a steep backwardation going into the 9-day at 17 and the 30-day at 16. So option dealers are pricing in some moves tomorrow, potentially on the jobs report, if not geopolitical tensions going into the weekend. We may see a response from Iran overnight or Friday going into the weekend. Things could get spicy like they can do on a Friday. And coupling that with one of the most important economic prints of the month, the jobs report, could make for an interesting session tomorrow. The forecast is the US economy created 200,000 new jobs in March, and that the national unemployment rate will be 3.8%. And for the large part, Jay Powell and his team are still talking up rate cuts. However, it could be possible that he's misreading what's powering the US economy, like a former Fed official saying that the Fed chief is underestimating how much easy financial conditions are fueling the economy. And it's true, the aggressive rate hikes may have slowed things down for a while, but they definitely didn't topple the economy, put it into a recession, spike unemployment like they normally do. Had this AI boom, and the US has had record immigration. When you look at both legal and illegal immigration, there's a flood of people coming into the States, and that is helping to keep prices and inflation propped up as well, not to mention risk assets at all-time highs. Financial conditions really aren't that tight at all. But the real reason he wants to cut rates is not to stimulate a struggling economy, which it isn't. It's to allow the Treasury to refinance a huge amount of debt, also helping out corporates as well. And I think he's okay with risk markets at all-time highs and a bit higher structurally sticky inflation, allowing the government to inflate its debt away. However, bond vigilantes could come back and spike long-dated yields, even if short durations are able to stay low based on the Fed cutting. Because I think Jay knows all too well Congress is going to keep spending like crazy. There's not going to be any real material reduction in spending or increases in taxes. The only real path out of this mountain of debt is inflation. And that's why we could be undergoing a structural change in financial markets from the past 15 years being one of growth assets, low inflation, rock bottom rates, to one where potentially hard assets benefit. Like this analyst Larry McDonald is saying, trillions of dollars will flow out of growth stocks over the next decade. That's because money is heading into inflation beneficiaries or assets that rise if inflation stays high. that could create a bull market in assets like gold, aluminium, and energy. And that's because in a world of rising geopolitical tensions, war is inflationary, just like we saw back in the 70s. And reason why we've already got gold outperforming stocks this year and looking a lot better technically on the chart as well. And there's already a bit of a change going on underneath the hood. We've got the S&P 500 sitting right at its 50-day VWAP now. We've got the Nasdaq losing its for the first time in months, and the Nasdaq equal weight looking even worse, down 1.5% today. And arguably the most important stock in the market, NVDA, closing off pretty hard today, down 3.4%. It too floating with its 50-day VWAP. The largest stock in the market, Microsoft, consolidating after having lost momentum, and the second largest stock, Apple, testing current support that it could potentially lose over coming days. Whilst the energy sector is on a parabolic rip, higher highs, higher lows again today, and isn't all that far from all-time highs back in May 2014, whilst we've also got gold clearly sitting at all-time highs in a bull market, along with aerospace and defense stocks, still not that far off highs either, and a big breakout and agricultural commodities. Last month finishing up 11.6% and trading a little higher again here. So all the ingredients are there for a bit of a pullback, but this stock market has been so resilient, seems to buy the dip at every chance, knowing that Jay Powell's got its back and is still convinced it's going to cut rates. Even after we heard Kashkari hint at the possibility the Fed may not cut rates today, like I said, there's a bit of a flight to safety, I think, on geopolitical reasons. That's why we got Fed Fund Futures actually increasing the chances today that the Fed will cut in June, only given a 30% chance that they won't cut. And why the 10-year bond yield fell a little bit today, currently sitting at 4.3. So there's big opposing forces happening in the bond market. The last couple of months, it's repriced from 6 cuts to 3 cuts. Looks like it wants to go higher on these hot economic prints we've been getting, but is tempered by the fact the Fed indicating it still wants to cut, and now a bit of flight to safety based on geopolitical tensions. And that's why we've got TLT a bit range bound here. It could stay that way for some time yet. Moving on today, I wanted to touch a little bit on the hottest meme stock at the moment, brought to my attention by a regular supporter of this channel, KL, and that is Root Insurance. They're an auto insurance company with a strong focus on technology and AI to help better price policies for drivers as they use 25 billion miles of driving data to help price risk better than their competition, and it appears to be working for them really good. They claim to be the largest auto insurtech in the country with one of the best loss ratios. They have a proprietary tech platform and data science algorithms with a huge total addressable market TAM of 300 billion, with aspirations to be the #1 personal insurance provider based on their technology and a direct mobile app for consumers to use. And looking at their revenue trends, business seems to be on fire, growing really fast. Got 680 employees coming out of Columbus, Ohio. And in addition to a strong, exciting business with a lot of potential, with a ticker like Root, of course the meme crowd is loving this stock. Huge breakout after its last earnings on a significant beat, still losing money, but the growth story is there. It actually came onto the market in the COVID bull market, October 2020, fell significantly, and just looking at a logarithmic weekly chart, may have put in a stage 1 accumulation, and it is ripped up off those lows, now with a market cap of 1 billion, and what a parabolic tear it's been on. Even today, with significant weakness across the market, still managed to climb 4%. And just goes to show, no matter what market we're in, there's always a bull market somewhere, as there'll always be a lot of money out there that has to rotate into something and find a home. So thanks KL for bringing that to my attention, and we'll keep an eye on it going forward. Looking across the rest of the meme space today, most names came off. However, we still got some others hanging in there like Eastman Kodak, Nikola, Carvana. However, a previous hot one that NVIDIA invested in, SoundHound AI, actually lost its 50-day, along with other AI stocks. C3 AI and Big Bear AI clearly well off their highs from a month ago. And look at that, the greed index is no longer the greed index, now pretty much smack bang in the middle, neutral 49. And whoa, look at that, corporate insiders doing a lot of selling yesterday, 310 sales versus 46 purchases. That's really interesting, especially after that candle we got today. Still got high yield bonds hanging in there, pretty close to support though. Dollar just sitting at its 50-day, and Bitcoin actually holding ground here today and defending its 50, along with silver consolidating, and a bit of a pullback for the Nikkei, losing its 50-day, first time all year, and the value versus growth spread continuing to hold up a little bit off these lows, and a momentum upward thrust in the spread between commodities and stocks today, not to mention inflation expectations continuing to hold this uptrend, and momentum, the weakest performing factor, sitting right at its 50-day as well. Big volatility in the cannabis space. Seen this before back in February, kind of just comes off on not much news. And so it looks like it may have done a little bit of a fake out there today, taking out those highs from early February before quickly turning around and going down to the 15-minute chart. Just looks similar to the market, just didn't like that rip in oil, gold, and treasuries. Maybe a bit of hot air coming out of this one. However, we'll see whether it can defend its 50-day VWAP. If not, it may come down and retest this support zone again. And this is definitely a sector that requires a bit of patience. So I saw Lululemon get slammed down again here today. Used to be one of the hottest stocks in the market, growing really big not too long ago, had market cap over 50 billion. Same with Altar Beauty. After the CEO yesterday signaled a slowdown, got a couple of analyst downgrades, market was slammed down over 15%. So look at Trump Media, pulling back a bit here today, and Reddit, still sitting a bit below where it came onto the market. Other hot stocks, Super Microcomputer, closing below its 50-day for the first time this year, and pretty big fall there for one of the largest semiconductor stocks, AMD. Down 8% as well. And we've still got MicroStrategy holding up a bit with the best looking trends in the market now in the commodity energy space. And there's ExxonMobil. Trend strength really strong here at 30. This thing's gone parabolic. And apart from GE and DraftKings, some of these other hot stocks looking a bit weak here today. Wingstop off 5%. Abercrombie and Fitch down almost 6%. And like I said, it was really the aerospace and defense, in addition to energy, the standouts today, with the banks coming off a little bit. So looking at all that price action, like I just showed you, wasn't so much what Kashkari said about the possibility the Fed can't cut rates. Otherwise, we would have seen yields rip and bonds fall. We got the opposite. It's more oil and gold ripping on the back of geopolitical tensions, confirmed by the move higher in defense stocks, and that's kind of just accelerating that rotation I've already been talking about for a couple of weeks now into energy and commodities on the back of increasing inflation expectations, and now we've got volatility joining the party as well. So tomorrow could get interesting on the jobs report, and with the looming response from Iran, markets on edge to see how big they go in their revenge attack to Israel, and then what sort of defense will the US-led Western Alliance come in with that as well. On top of Blinken just coming out and saying Ukraine is going to be a part of NATO, no doubt stirring the pot further with Russia as well. And that's why commodities and gold have been the place to hide out. Thanks very much for tuning in today, and make sure you come back to the channel tomorrow and I'll break down everything that's happened, the market's response, price action, and my analysis and thoughts on what it all means for us investors. Cheers guys, and see you tomorrow.